Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today by a repeat guest. We have John on, the CEO and founder of TechTape. John, welcome back to the show.
Thanks, Jamie. It seems like it's been forever, but it actually hasn't been, and really excited to have this conversation.
Yeah. I always love getting to talk to you. I feel like we see each other semi-regularly at sort of industry conferences and events. And it's always sort of fun to dig in with you and on what you're seeing on the ground, how you're reacting to sort of macro events, and like what you're hearing from others in the space. So maybe just to start, and I kind of feel like this episode is like going to be kind of like us catching up and sort of letting people sort of get a sense of the type of conversation that we have. But it's also like there's so much happening in the macro environment right now. I'm afraid to look at my phone some days when I wake up, just because and sometimes I don't want to know what I'm happening, and like tell myself like, Jamie, it's your job to know what's happening and be able to try to interpret it. So let's start, John. Like, how you feeling?
Me personally, I'm feeling great. Just everything, just like, family, everything, it's good. But I know the question is really more about the short-term rental industry and revenue and, things of that nature. I guess I'm neither doom and gloom nor exuberant, outlook. And what I'll say is towards the end of the year, I think a lot of us had kind of an exuberant outlook saying, hey, this is going to be a much more pro-business administration. And so with that as kind of the background, we can kind of push a little harder and try to drive higher revenue. I think within the past maybe 4 weeks, but really within the past 2 weeks, lots of things have happened. And so now I think it's more the uncertainty rather than what's actually, what the market is actually doing. And so putting it in terms of kind of like an investment focus, I'm basically in kind of hedge mode, right? So not trying to push too hard, taking kind of a moderate approach to it, not tanking everything because, oh my God, the sky's falling. But a lot of it feels very similar to the early days of COVID. And I'm not saying this is COVID, but, where there are a lot of people who are saying, don't worry, nothing is happening, this is all good. And then there are a lot of folks who are saying, oh my God, what's going on? And so I'm somewhere in between. I don't want to give away too much now in case things are good, but I also don't want to be, pushing too hard and then reacting like a lot of other folks are probably going to be doing. So I'm kind of straddling the line right now. So that's how I'm feeling these days, confused.
Yeah. So maybe, and for those people that don't know you or haven't heard you sort of talk before, can you give us a brief overview of one, what is TechTape, and two, where's the portfolio of properties and sort of distributed that you're looking at data on a regular basis?
Yeah. So TechTape, we are a tech-enabled revenue management service for the short-term rental industry. So we really do focus on the short-term rental. We're not venturing out into hotels and things of that nature. I think that's a far different game. And I personally have been in the revenue management space for almost a decade now. And TechTape is about 3 years old as a separate entity. And so we've been having some, fantastic results for the clients that we've worked with. And we can actually continue to do so in March and April right now. But that's kind of the lag effect of kind of the previous work is how we're seeing it. We actually have a global footprint. So of course, the US is our, bread and butter. So, Hawaii is the one market that we're in. But California, Arizona, Michigan, Maine, New Jersey, Maryland, basically, most of the markets within the United States, most of the, popular markets we're in, and even some of the non-popular markets. We have urban, beach, mountain, all of that. And then internationally, we have a pretty decent footprint in Australia, and then we're in Japan, we're in Greece, and so we kind of see a broad spectrum and not just like one economy, one country, but kind of not like the data level that AirDNA would see, but on a portfolio level, we're seeing kind of differences across the world as well.
Yeah, so you do have a sort of pretty broad view of what's happening across the space. I wanted to maybe share a couple data points with you and get your sort of reaction of like what I'm seeing at a macro level and to get a sense if this sort of aligns with what you're seeing on a more local level or if you're seeing something different. So this morning I was looking at sort of typical like destination type markets, beach, mountain, um, and there and first sort of 3, 4 months of the year, I've seen booking lead times and pretty and on par with last year. It's still down from 2019, 2018 levels, but essentially on par. We're seeing summer pacing actually looking pretty good. June, July, sort of peak months we're actually pacing ahead on terms of occupancy. Like, look at that data, and I'm feeling pretty good for sort of domestic vacation rental markets. And we're starting to see some pricing power too, which maybe hadn't been as strong or even weak in recent years. Then I look at some of the more urban markets, and I'm seeing lead times come down a little bit from last year and just a few days. Like if it's average lead time for an urban market was like 30 or 40 days, like it's down by 1 or 2 days. So nothing like alarming, but definitely some softness there. And when we look at sort of near-term pacing, I'm starting to see some weakness. And outside of April, which and rest of April is looking strong because of sort of the Easter shift, but start to look into May, June, like it's not looking and super strong and is actually looking a little weak in terms of occupancy pacing and ADRs are still holding up. Like it doesn't look like people are starting to discount yet, but definitely not as much demand as I'd like to see in the summer, sort of heading into where we're at right now. How does that align with what you're sort of seeing?
Yeah, I mean, definitely. If I'm looking at overall, just like RevPAR pacing, so not just kind of the combination of the occupancy and ADR, just generally across the country and in individual markets. At the beginning of the year, the second half of the year, or a little more than the second half of the year, like all markets were pacing ahead of 2024, and so that was part of my exuberance as well. What we're seeing in markets, like the Smokies, or I know Smokies and Honolulu are different, but kind of the destination markets, the booking pace has remained fairly steady for us by us adjusting looking and adjusting some of the, trying to get further out bookings, right? And so the way our data looking is not actually on the booking pace, but it's is our ADR going down a little bit? Is the RevPAR adjusting, and that is starting to be impacted a little bit in those markets. So lead times, again, the reason why RevPAR is pacing ahead is because I actually think a lot of consumers had seen the value of where the properties were like placed earlier in the year. We are seeing, again, the booking pace slow down a little bit, just a tad now. I think we talked about like 5 days ago, and at that time I said we're not seeing much of a difference, and at this time we're starting to see that slight tick down. Urban markets, I'll I know all the data folks are going to be like, John, you don't know what the hell you're talking about. But what I will say is the partners that we're working with who are in urban markets are reaching out to us more with kind of questions or, hey, what's going on, a little bit more than they typically have in the past. And so that's an indicator that, there's a shift going on as well. Again, I know that's not data, it's anecdotal, but it's something that we're experiencing, for some of the urban operators.
Yeah, I mean, I think in and it's reasonable to be concerned if you're a urban operator. Like you look at the average urban property, like, uh, and we see about 20% of demand coming from international guests. And you've had to have your head under the in the sand to and not hear the headlines of and what some of the airlines and hotel companies are saying about what's happening in terms of international inbound to the U.S. In March, we saw like for Canadian inbound down about 12%. We saw when we're looking at some of the different sort of major Eastern European countries down anywhere from 10 to 20%. And then we got the sort of government data, and it's one of my favorite data points, the I-94 data. And so they actually put together sort of every country and how many people on flights are coming in. And in March, and they reported UK inbound demand was down 14%. Germany was down 28%. Spain was down 25%. Colombia down 33%. So overall, top 20 countries, and we saw demand down 10%. That's just March. In March, I think it was really just the beginning. March is still relatively low period for sort of international travel to the US. So if we start looking forward into the summer months, like where it becomes a larger overall piece of the pie, like I could get why some of your sort of urban owners, urban operators are starting to get worried about what's going to get booked. Because another thing we know is that international guests book longer stays. They're willing to spend more money. They book further out. And if we're not layering that in as sort of, that sort of, well ahead book in advance guests, like it gets harder to manage revenue. I'm assuming as you get closer to the stays, it might have to start discounting.
Well, right. So, kind of stating the obvious, a big part of our, approach is capture the higher value, the big bookings kind of further out. Not too many, but like you kind of get to that right balance out there. And then you kind of fill in, again, this is a broad generalization, but
Yep.
fill in and that kind of balances everything out in terms of the overall revenue performance. Seeing the, kind of the slowdown in the further out bookings, yes, and especially in urban markets, not only within the trends that you were saying, kind of just the travel trends, but then the folks who are traveling, obviously they stay at hotels and, other types of accommodation, as well. And so that is concerning. Now, this is a question for you, Jamie. Is part of the slowdown in international, like how was the US dollar relative to those other currencies last year versus it was this year, right? And I asked that because, like, for example, like I just traveled to Japan, and I think like a lot of folks that we know traveled to Japan recently within the past year. Why? Because the US dollar was so much stronger that it went so much further, right? So, and you have a better pulse on this, but I think recently with all the turbulence, the US dollar has fallen, you know, relative to other currencies. So that might be some, some tailwind relative to some of the other, other factors.
Yeah. And one, we've absolutely seen a deterioration in the dollar over the past couple weeks. All else held equal, you would think that would make travel to the US be significantly more attractive and Americans traveling overseas significantly less attractive because we've seen really the exact opposite of that over the past and really since like Trump first came to first election in 2016, we saw a real appreciation of the dollar. We saw a pullback in inbound demand to the U.S., and we saw a major increase in outbound demand from 2016 through to the start of COVID.
Is that called a deficit? I'm kidding. I'm kidding.
Yeah, and like more recently, and the dollar, and really since 2022, dollar's been very strong. We've seen that in terms of outbound demand from the US. It's been enormous, like 40% more pre-COVID spending outbound. When you look at inbound to the US, it's still below 2019 levels. So, I'm when I think about what the impact of the decreased dollar is going to be, and there's sort of two factors. Yes, it should help on the margin of keeping people domestic and attracting inbound international visitation, but it does nothing to sort of change the sort of global perception of coming to the US. Is it going to be more difficult to get my visa? Is there the potential of getting stopped when going through customs and being detained? Or like, has the US put tariffs on my country? You know what? I just don't feel like traveling to and supporting US businesses right now. And I think the latter is going to impact US inbound demand more than sort of the dollar impact. And that and perception's hard to change. It's hard to measure. And I think we'll see how the summer plays out, but I'm not very bullish on the outlook now. If anything, the dollar might impact Americans and maybe a little bit softer on what would have been US outbound demand going international.
Yeah. No. And general sentiment, I feel the same way. It's a counter factor to kind of everything, pushing backwards.
Yep.
And like as you said, sentiment is important, right? So for example, me and my family, the other day I just sat down with my kids and my wife and just said, hey guys, like there's a lot of volatility right now. So, like let's just be thoughtful about our extraneous spending, right? My daughter loves matcha and gongcha, the bubble teas, right? And it's kind of like whenever she wants. I'm like, we can still have it, but let's just, moderate it, right? And that's my sentiment already. Just as a, just kind of keep the family's finances in line. And so that's kind of, I'm sure across the board, there are lots of folks who are thinking, at least sentiment wise, let's pull back just a little bit on our spending, right? So
Yeah. So maybe and switching gears a little bit on one of the biggest questions I'm getting today is, do you see any signs of booking weakness? And if you do see signs, do you think we're sort of going into recession? And I know you look at different data than I look at. So when people ask you, sort of one, John, do you see booking weakness? I think you've already answered that. Like, yes, you're seeing a bit. But then secondarily, what are the factors? What are the data points you're going to be looking at that sort of start to and be red flags of like, all right, like we need to change our revenue management strategy right now and go and start hunkering down and because and I've been doing this for 10, 15 years, sort of looking at the data. And generally what I see is the people that can react quickest are the ones that are and thoughtfully are the ones that are able to weather the storm the best. And those that sort of get caught out, they're sort of and waiting for bookings to come that are never going to show up and not making adjustments are the ones that are going to see the weakest performance. So as one of the foremost revenue managers in the world, what are you looking at every day, John?
no, thanks thank you for stoking my ego, but one of many amazing revenue managers. No, if we're managing, portfolios, if we're not changing the strategy much and the occupancy starts going down, right, and the booking pace starts going down, I state the obvious all the time, but that's kind of a red flag. And like I said last week when we just were on the call, I said we haven't really started seeing that. And
So maybe let's step back. Like, how are you measuring booking pace? Like, is it for that property? Is it for the comp set? Is it for the submarket? Like, what are you actually looking at? What tools, what data points are you using to actually measure booking pace?
we are looking primarily at the portfolio, right? So how, again, the market the market data is important, right? And it tells us what's going on. But the market data is also with a lot of, people who are kind of just like set it and forget it and those types of folks, right? So it gives you it gives you a really good indicator of what's going on, but it doesn't mean that that's what we should be doing for our portfolio, right? So that's kind of the mindset. And so that's why we're looking at our portfolio's performance and then corroborating it with market data rather than focusing on the comp set and the market data to then tell us what to do with the portfolio. It's kind of I think it's slightly reversed from what I think, what I hear a lot of folks do is they're looking to the market to tell them what's going on. And I think we have a really good pulse on within each city, within each portfolio. And, some of our clients have just a handful of properties. Even then, I think there's a good enough kind of pacing history to understand, hey, something is shifting. So that is our primary indicator. And I think it does help us see out, because we have kind of that history, it does help us like predict the future, you know what I'm saying, right? And again, that's why our stance has shifted just a tad between last week and this week, because we are starting to see that slow down. And there's always that lag effect. And so by the time you see it in the market and even in your portfolio, like it's kind of already happened, right? And that's why we're kind of hedging and trying to expand the booking windows for most of our portfolios at this time, just a tad, so that we're at least one step ahead, not 5 steps ahead, but one step ahead, and gradually. And your question was, when is that moment when you do it? And it's actually gradual, like as it's happening. I always use the driving analogy, right? Like if you're gradually making the adjustment, it's not a drastic adjustment when it has to be made. But if you're waiting for that signal to do it, then it's like this hard swerve. And that's what we're trying to avoid, is that hard swerve.
So let's say you're like me and you've got one property, you're trying to do it yourself. You don't have this great portfolio view that you have, John. Like, what would you suggest to that person that's sort of trying to get a sense of how they should be maintaining their revenue management strategy without sort of that portfolio view that you have?
Yeah. So we do have some clients who have just one property. So we do work with that. We do have a little more history with those properties than yours. At that point, we would be looking more, weighing more heavily what's going on in the market to give us the trend. Is it going up? Is it going down? But the thing that we're not doing is we're not saying, oh, the market ADR is this and the market occupancy is that. And so, I should be 10% above or below what that market, that's not where we're never, ever, ever chasing what the market is doing. We're finding the trends that are going on in the market and then try to optimize the performance of that specific property. I told you this before, but we have this one mansion in Plainfield, New Jersey. There's not a real comp. And if you look at the market data, like it would not tell me anything about what we need to do.
Yeah.
And yet we have consistently been generating over $300,000 in gross booking revenue on this one property for the owner. And at that point, we're just really focused on the individual property's performance and kind of making minor adjustments on a consistent basis. And I think that's again, the occupancy, the ADR, the RevPAR, those are the metrics that we're focusing on, and then looking at the booking pacing for a little guidance for the future.
Yeah.
Nothing earth shattering, unfortunately.
No, I think that's refreshing though, of like that there's not some like special box of data that you're able to access. And you're looking at the property level data, you're analyzing and what you think should be happening either based on historical data or getting a sense broadly what's happening in the market and how it's changing from prior years, and then making small adjustments off of that. Like revenue management doesn't have to be rocket science. Like it can be monitoring what's happening to the properties. Are you getting bookings? Are you not? If you're making adjustments down on terms of rates, are you seeing those make meaningful improvements on occupancy? And if not, like you're continually sort of pushing those small adjustments. So you're not sort of, as you said, and swerving maybe on rate to drive occupancy when maybe you didn't need to make that swerve, and you're sort of feeling out what's going to drive those incremental bookings. Is that right?
Right. So to be clear, I am not a rocket scientist, right? And and
Hey,
yet
you're an architect.
I'm an architect, right? Exactly, right. And yet here I am, built a pretty solid revenue management company, right? Yes, we do. We ingest data and we process it, but we make decisions based on what we're seeing. Can I use a lot of analogies, right? And this is something that I've been, a lot of people say, well, we use price labs. What do you do different from what we're doing, right? Or your wheelhouse, or whatever it may be, right? Or we use AirDNA data. What are you looking at differently than what we're looking at? The way I look at it is like, price labs, wheelhouse, AirDNA, like these are amazing tools, or like parts of the pieces that you need to kind of use to understand what's going on, right? But at the end of the day, like you need to make nuanced decisions, right? Right now, the data is not going to tell us what we need to do 3 months out, right? Because there's so much volatility. So the way I kind of try to bring this point home is, if it was all in the data, right? In sports, we would not have to play March Madness, because we would know that the top ranked team with the top statistics would always win, right? But no, it doesn't happen that way, because during the game, the players make adjustments to the strategy, the coaches make adjustments to the strategy. If the opposing side does something different, then you have to adjust your strategy to counter that, right? So just because you have the tool doesn't mean that the data is going to tell you where it's going to go. And it's making those decisions on an ongoing, consistent basis that really kind of drives it home, at least from our point of view. So the data is really important, but it doesn't tell us what to do. It tells us what's going on, and then we're making some fuzzy decisions. Really, I mean, seriously, fuzzy decisions here and there on a consistent basis.
Yeah.
Sorry.
No, it reminded me of this sort of term. I was talking with my cousin, and he's like, I'm going to the coffee shop to do some vibe coding. I'm like, what is vibe coding? He's like, like sort of like use these AI tools, like use some like things, and like we're just sort of moving through the code. He's like, I don't know how to code. Like, and I feel like it's the same way. Like, and someone could say, like, I don't know how to do revenue management, or I've never been trained in revenue management, but you're sort of moving your way through the data, getting a sense of what's happening in your market, what are happening to competitors, are they getting booked, are they not getting booked, and how do these different metrics look? And then you're sort of feeling the vibe of the market, feeling the vibe of the property, and sort of making adjustments. And the more you, and what I get the sense though is the more you're looking at it, the more you get a sense of how your markets and properties behave, the better you're going to get a sense of like feeling the vibe and feeling the sense of like how you should be making adjustments, how you should be making those decisions. Am I just like searching at straws here, or
No. It's yes.
Yeah.
At the same time, we have systematized a lot of that. the vibe searching, the vibe coding, right? So
Yeah.
As we're seeing more and more, like, okay, like this is a process that that we're looking at, that we're systematizing it on the back end. And that's why, so we have API connections with a lot of the PMSs, right? So that we're actually ingesting the data. That's why we say we're tech-enabled revenue management. And so we've systematized some of the vibe, but a lot of it, there are things where it's just kind of like you make decisions along the way on a consistent basis.
Yep. Yeah, and maybe that's a good takeaway too. It's like, and it's don't get sort of stuck by and having to make the decision. Like, and go ahead and make the decision, know what you're doing, and be able to look at what are the results of that decision, and then make another decision the next day. Like, just because you're adjusting your prices once, seeing the result doesn't mean you can't sort of make a different decision the next day and continue to learn from each of those decisions.
Right. Yeah. Exactly. That's the secret sauce, Jamie.
Yeah, just act. So and we've talked about and sort of macroeconomic weakness. We've talked about and sort of international demand. The other sort of point I've been hearing from people is what's been happening on the government side. And you did say you had a property in the sort of Maryland, DC area, I think you said. I was looking at that data and more recently, and we did have the inauguration in January, but we've also, at least looking at the market data, we've started to see some occupancy weakness. I wouldn't say February and March are maybe peak times for visiting DC, but and given all the headlines coming out of DC and the layoffs and sort of the pullback on government spending, it does have me a bit worried for that market. And I think it's maybe a indicator for other markets that are sort of dependent on sort of government or maybe specific industry. And we could and see major disruptions for certain industries. So maybe, and do you see something different when you look at the DC data that makes you any more worried, or do you think this might be just be an ebb and flow of that market?
Yeah, so I just pulled up, that area data, you know, and yeah, definitely it is. I mean, actually, since about mid-February, it's been slower than some of the other markets right now. The extent of the layoffs and people like basically losing their what was supposed to be like a long-term steady lifelong position, right? For sure, I'm seeing it in our portfolio for that market. And then my sister lives in Maryland, and she has also like her friends who are in the government, just like all of a sudden. So there's a huge pullback of economic, just general overall economic activity down in DC. My sister has a company that does like waterway restoration, right? Like
Yep.
natural, and that's all government. And so like those things are starting to pull back. So um, yeah, I would definitely say that the DC market, it's probably already hitting now. I actually have some friends who have large portfolios in that area, so I should speak with them about what they're seeing. But our data, as well as anecdotal, is kind of aligning, and also it's kind of what you're seeing in your data set, right? So
Yep.
yeah, but I mean that this is why I'm calling this like a black swan event, right? Again, maybe it doesn't hit all the definition of a black swan event, but it's something that is so not typical, right? All the things that are happening, trade wars, yes, Trump talked about it prior to being elected, but I don't think many folks actually thought, we'd be going on like this global, run. And so there's just so many unprecedented things that like the relationships of how the economy works is all kind of, it's kind of we can't predict what this one change means to another thing because there's also interconnected. And that is the part that gives me the biggest concern is because we've opened up a Pandora's box essentially. Because right, like now trade war is like every country now is like open to tariffs. So now what's that trickle down effect as we move forward down you know months, years.
Yep. And if anything, it just has introduced a whole lot of uncertainty to the market.
Exactly.
And for business leaders out there, like if you have uncertainty, and you don't know, and there's so many examples out there in the news of like, you don't know how to plan for what your expenses are going to be. And so
Then you pull
you're
back.
hunkering down. Yeah.
Yeah.
And if, for guests or potential guests booking, like if you don't have to plan right now, if you don't have to book well ahead of time, then maybe you wait a bit. And those times I feel like are the hardest for the revenue manager because it's not that people are saying they're not going to take the trip. And I think, and most of the consumer surveys have still said, people still plan on taking their summer travel. It's just they're maybe waiting a bit to book it till they're more confident that they're going to have their job, that they're going to continue their income, that they can still go buy that bubble tea.
Exactly. Now, the flip side, though, during this period, right? So, generally speaking, once they've booked the trip, the vast majority stick with it. It's kind of a done deal, right?
Yep.
So that's why, as part of our hedge, is we're trying to expand the booking window across all our U.S. portfolio because there's kind of that like, let's just like have them make the decision now, make it attractive so they can make the decision now. And then at least, we have 80% of that kind of in the books. And I mean, we typically are very aggressive with our far out pricing, and we've tempered that down quite a bit over the past week and a half ish.
Is there any other way to sort of impact that other than pricing, or is it just a pure price play?
Of course, it's not a pure price play. Obviously, promotions to just get out and in front more of more consumers, which doesn't necessarily have to be a discount, right? So promotions. I would also say, and again, this is not. We work with our partners, but they are the ones that decide on the promotions, and that's why I kind of talk about it at a high level and not very specific. The other way you could do it is actually, if you know your feeder market to your destination, then really targeted promotions to those feeder markets, right? So not just blanket anyone who comes and finds us. Booking.com has a really good way of like, depending on where you're coming from, you could give different promotions, right? So like, strategies like that right now to get more people to come. So it's not just about the price. And then also length of stay restrictions, right? So oftentimes, further out, you have longer length of stay. Maybe you want to relax that a little bit now so that people who are looking for a 2-3 day, getaway can make that decision now, and you're not preventing them from finding your properties.
No, that all makes sense. I like that it's not just price. There's other ways to do it. Well, I'm sure price
Yes.
is one of the factors as well.
I mean, at the end of the day, uh, I think consumers make decisions on the bottom line number, right? So I think the pricing has one of the biggest impacts. Obviously, algorithm, if you don't show up, you're not going to get booked. But assuming that you have, and you don't have to show up on page one, page two, page three, like, you know, people still search when they're searching for a deal. They will go through, a little bit more. So it's price is a big factor, but yeah, there are definitely, other things that you should be doing. It shouldn't just be just on the price.
Yeah. Well, John, this has been cathartic. This has been great to sort of chat through what you're seeing, what you're hearing. Maybe, and depending on how things go this year, we might need another vibe check on on what you're seeing, how you're reacting. But I really appreciate you joining today.
I appreciate you inviting me on, and of course, I always love these conversations, whether it's at a conference or on a podcast. But yeah, let's check in again. I would say, we don't have to do a podcast, but I would say within the next month and a half, I think we'll get a pretty, more definitive signal as to where things are going.
Yeah.
So I might pin you shortly.
Yeah, well, always look forward to it. For listeners, and if you're looking for help with revenue management, I always suggest John. He's great, very thoughtful of what he does, and I always appreciate our conversations. And John, thanks for being on the show.
Thanks, Jamie.